What's up, Mortgage Coach community? Dave Savage here, and I am interviewing Jay Crowell. Jay, what is up, brother?
Hey Dave, how are you, man?
I'm doing good. I'm doing good. So it's been a little over a year since our last interview, and one thing I remember about you, every time I interview you, I get a new idea. So I'm not saying I need to get one, but I have always got a new strategy that we can make as a best practice in the Mortgage Coach community, and we always get great scripts. So if you could just tell everybody, in case they haven't heard one of our past interviews, who you are, what market you're in, and let us know how you did last year.
Yeah, so Jay, I'm with Cornerstone Home Lending. I wear a few different hats. I'm in the Seattle market, so I'm a regional manager over our kind of King County core Seattle market. I also do personal production as well. My team, we did about 180 million last year in production. And then our region, we were about 1.3 in volume in 1.2 billion. So a couple different branches and then area roles. So a lot of production, really happy about it. And the production per loan officer is really, I would say best in class. And we don't have we're not really oversaturated with a ton of LOs, but we have great production per loan officer. So that's exciting.
Yeah, well, congratulations. I mean, those are just incredible numbers. My favorite metric is how many total cost analysis you've done. And I am looking at the back end right now, and you've done 2,794 TCAs, total cost analysis. And to me, that's special because that's several thousand families that got more than a rate, a payment, and their closing cost. They got a Mortgage Coach TCA, which showing them the cost over time. So congrats, bro. That's massive production. And then you're delivering a massive level of service and value. So thank you for that.
Well, it's a pleasure to serve our community. And I definitely believe that what the total cost analysis provides allows us to be able to serve the community better and help people really understand their short and long-term borrowing costs. That's a key.
Cool. So let's unpack your practice. Last time I interviewed you, I don't know if I would say more than 50%, but a lot of your families were coming to your office. So what percentage of families are coming into your office versus over the phone and digital experience?
We're heavy on purchase percentage, so we do a lot of purchase volume. We're not just, doing refis. Now, obviously in the season, being in the first quarter and where rates are at, we've had some staggering applications, but I would say that if they are a new client to us and they're buying a home, I want to say we're getting about 70 to 75% of those clients in for a consultation. And Seattle, we have awful traffic, and people are on the go. And if we have people coming in from out of town wanting to buy, then, that's not a possibility. So there's a fraction of people that it's just not possible for them to get in. So we try to do some sort of virtual pre-purchase consultation.
Got it. So 70% are coming into an in-person experience, 30%, it's a pure digital experience. What percentage of your families are you sending a digital link to and they're filling out, a portion of the information before the consultation, whether it's a digital consultation or purchase? What percent are filling it out versus you're interviewing them and filling out the app?
Oh, 100%. Everyone fills it out before we go over price.
Yeah, so I find that interesting. It's pretty rare now that I talk to a loan officer that it's under 90%, but it's interesting. When I do these interviews, I interview top producers, and it's always over 70, over 90%. But when I'm out at sales rallies, I talk to loan officers, and I'm still hearing a lot of loan officers that are not driving that digital experience. So I would just push every loan officer listening to this. You heard Jay, it's like 100%. If you're not using that digital link, and I've done a lot of best practices on it, you're not being efficient for yourself, and you're really not being as efficient as you can be for that family. So good. Got a digital app experience. And then what percentage of the clients are you giving digital advice to with a mortgage coach TCA?
I would say, I mean, 97% of people are getting a TCA. Anybody that's buying a house, the only time that it happens from time to time, and I know there's a reason why to do a TCA, although I do have a counter at times, but unless it's a past client and they're pricing and they're fast mover and they don't want a whole dialogue, they call me and they say, I'm at 4%. You can get me 3.25 today at 0 points. Let's go. I mean, we're going to do that. So now you may say that's a quote that you can put together and they're going to share it. At the same time, you know, I'm not a huge fan of my clients sharing their rate with somebody else, because then that's going to be an expectation that they're going to get that same quote back. And I've just gotten in the weeds there personally. If there's somebody that wants to analyze it and have their financial planner look at it, have their agent look at it to help them make a good decision, then the TCA is amazing for that. But if, you know, like I said, if I know them, if we've done multiple transactions for them and there's a high trust, and they don't need that analysis, I would liken it to, you know, if I pick up the phone, you know, from a phone call from my financial advisor and he says, hey, this is what we should do today. This is what we should buy today. I'm probably not going to be like, oh, send that to me and I want to see all the details. Now, if it's a totally new concept on investment, then I'm going to want the pro forma. I'm going to see, you know, what am I buying into? But I try to treat those clients, you know, at the pace and the speed that they want. So if we can, we'll do it that way. But for people that are buying a house, 100% are going to get a total cost analysis.
Beautiful. And I think that makes total sense. 97%, 100% of purchases. And at the end of the day, guys, the takeaway from what Jay just said is it's tailored. You know, he is listening to the consumer. He is being thoughtful about the experience. And there is time where too much information is damaging to the quality of service, and the value to the consumer is too little information. So it's tailored, you know, and that's what the best people do, is they're paying attention to what's the best tailored way to serve this family at the highest level. And I can completely accept that there's a small percentage of people that let's just take them through the transaction with as little education as possible. Because by the way, they were already educated with the TCA on the front end. So right. We are totally aligned. I have no edits to that whatsoever.
That's never going to happen with a client that we haven't had an introduction to, right? Somebody that doesn't know us, trust us, have worked with us multiple times, they're going to need a TCA anyways. So that's totally different. But these are people that we've served, you know, multiple times. We've gone through the analysis. They know what we do and why they should work with us. And so if they need that analysis on, well, points, no points, if that's the conversation, then we're going to break down, you know, a TCA, because that's the simplest, most efficient way to be able to give great perspective and knowledge on how to select their financing.
Beautiful. So perfect loan process for you. You had a conversation, or someone on your team had a conversation, enough for them to fill out the borrower questionnaire, AKA digital app. Then are you preparing the total cost analysis, or do you have a team member that's preparing that version 1 TCA before the consultation?
So an ideal, you know, process would be talk to a borrower, tell them about our process, which is, you know, fill out our form, get their qualifying documentation, reach full pre-approval, then meet for a pre-purchase consultation. Ahead of that consultation, I'm gonna price out the loan in Optimal Blue. And
you are gonna do that, or your assistant? I'm
gonna price it out.
Okay.
Now I do have my partner. We've worked together for 13 years. So if he starts the dialogue, then he's gonna take that until application. Just like if they start the conversation with me, then I'm gonna take that all the way through. So there's one point of contact up front. I think it's a big mistake to have all these different people talking to somebody until they're under contract. Now we do have somebody in the pre-approval process. So you fill out that app, then somebody's taking that and collecting all that data from the consumer until we have full pre-approval. Then I analyze that pre-approval intake form, know where they're at, price it out. We schedule a consultation. And then at that time, I'm showing them the TCA. Now I have a short form, and typically a team member creates the TCA, and I send an email that says, these are the programs. So I have kind of a simple, drop down signature that in my Outlook that says, boom, 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 and I can fill that out in less than 30 seconds.
Would you mind, as a follow-up to this, send me a generic template of what it looks like when you get the app, and also what it looks like when you send the TCA? Are you cool with giving me a couple generic templates post?
I will give you. I'll send the TCA one. Yeah, the other one.
Don't worry about it.
I might be able to find that.
Okay.
It's just a form that they fill out that they're giving me FICO, credit, qualifying, all that stuff.
Okay.
It's not
perfect.
It's not something. How's it going?
I'm on the interview. All right.
It's all about the it's just a generic, I don't think there's there's no rocket science about what we're looking at as far as the form.
Okay, cool. So we got that. And then they come in. When do you start talking about the TCA? How much time are you doing rapport building, hopes and dreams? And when in the conversation do you pull up the total cost analysis, just so we can get a feel for your in-office experience? And I'll just ask you to quickly, what's different about that when you're doing a digital experience?
I would say it's the same, other than I have a handout, and so we will cover a couple things. I always like to go over the difference between cash to close and down payment, closing costs, prepaids, and also explaining how prepaid interest works when it's a new buyer or anybody that's buying a house, because if you bought a house 6 years ago, you get caught up in that. So I like to have that dialogue beforehand. I also like to look at rate watch before we get into pricing, so that people understand how fluid the market is and how things change, and help them understand that just like there's a lot of volatility with Amazon or Microsoft stock shares each day, there's the same level of volatility with mortgage-backed securities, and helping them understand that the pricing that they're looking at today may not be there tomorrow, or in a week from now, or 2 months from now when they get under contract.
Yeah, that makes sense. And I think that's a best practice, guys. You want to make sure part of your pre-purchase consultation is that rates don't change weekly and daily. They change by the minute. And I've got a pulse on that. And so he's having that conversation. I've been doing a lot of interviews where it's like how to go from price to advice. And I just interviewed Denise Donahue and Jeremy Forcier, where each of them did a full, if someone just says, what's your rate? This is how I take them into advice. And I know in Jeremy's case, he's talking a lot about, do you have 3 to 6 months in reserves? He's talking about, are you maxing out your retirement? He's educating them that you always want to analyze the total cost over time. So he's providing, let's just call it some fiscal literacy wisdom that aligns, and it gets the family to go, you know what, getting a mortgage isn't about rate, payment, and cash to close. Getting a mortgage is structuring the right strategy for my goals. Do you talk about, retirement and cash reserves? And if so, how much time do you spend on that?
It obviously depends on the client, right? And some people, it's a reaction of where they're at. We start with, how much time do you have for our time together today? And what's really important to you. Obviously, everybody says, what's the rate I'm going to get? And so we'll talk about that. I'll say that's a good topic. We obviously have prepared some scenarios for you specific to your situation. I've kind of already told them that when we talked originally, that pricing is very, is structured based off of the individual, and it's not the gallon of gas or gallon of milk that the media tries to make out a mortgage is, and talk about the price level adjusters that happen in every situation, and how, reserves have come into it, what the income type is and structure. So we will go through all that initially, and then we kind of revisit that again at the beginning. We talk about their buying power. In our market, a lot of the clients aren't walking in saying, what's the max I can do? And a lot of our clients are kind of saying, this is where I want my monthly payment to be. And a lot of times that's a little bit unrealistic to what they want to purchase. So I know that, you know, where they're wanting to be. And so we'll talk a lot about what they want for monthly payment, helping them understand what their qualifying range is, showing what the difference is, but also being really respectful to, I'm really grateful to see more and more clients coming in saying, I want to be conservative with my monthly payment. I want to be diligent to be saving, to have retirement. But at the same time, we want them to have an understanding of what they can do, because, you know, if they're out looking for a 650 house, but they wanted to have the things that are an 850 house and they qualify for $1 million house, we should show them all that option. And so they understand that. Not that we want to push them into something that's more than they can afford or more that works for their budget, but we want them to be able to have that capacity and understanding so that they end up being able to buy. Because, you know, if I've fixed my budget to be unrealistically low, I might not ever buy a house.
Got it. So that makes tons of sense. So let's now expand and go into, you're going to show the total cost analysis. So first of all, let's say someone was in your office and want to hear the language, like, what do you call it? Like, hey, it's time to do blank. What does that sound like? And then why don't you, share your desktop and let's do a purchase TCA first. And then let's close out with a quick refi TCA, just because, I mean, there's a lot of great opportunities for refis right now. And we'll share a few best practices as we close out this conversation. So I'll tell you when I can see your screen. So let's start with, what do you call it? Like, what is it called when you're positioning it for a client? And I see your screen.
You can?
Yep.
Okay, I mean, I would say, all right, let's look at some scenarios that we've built, you know, based off your initial pre-approval and the range that you had started out where you wanted to be at. And so what we've laid out here is a purchase price of $593. The loan amount, this is a 5% down setup per your request. And we have 4 different 30-year fixed rate strategies. You'll see strategy A has a 2.875 rate, and strategy D has a 3.375 interest rate. Now you'll see what's the difference. Obviously your monthly payment's going to be different, but also your cash to close is going to be different. So based off of, you know, what we talked about earlier, where are you comfortable? Where's your comfort level on, you know, the cash to close note figures you're seeing here, as well as, you know, the payment range you gave me. This is all within that range. It's actually below what you asked for. So this is, you know, this is a positive on your payment. But how's that cash to close look? And then they'll typically say, well, what's the difference? Or why is a rate 2.875 versus 3.375? And from there, I'll typically open up the payment I'll show them the payment breakdown. The first part of it is really educating them just how to use the report, right? So I'll show them where the more info tabs are, and then I'll show them the closing cost. So if I look at closing costs, I'll explain to them points. A lot of people don't know what that is. So I'll walk them through that. So in this scenario, I'm showing them, you know, a large buy down, a smaller buy down, a no point option, and a rebate scenario. And I like to show them that because there's a lot of clients that, you know, they're trying to get their purchasing power up, and the down payment's the big, you know, a little bit of a crippling factor. So if we can help them reduce their cash to close, especially in this rate environment where you're still getting an awesome rate, we find that to be, you know, a positive for sure for people.
Hey, real quick, before you go off that more, but go back to that, how often are you doing a reinvestment strategy where you're showing, hey, what if you took this loan versus this loan, you invested it, or you used it to prepay? I know a lot of people use that for refis a lot, but do you use that feature very often?
I don't. I do not use the reinvestment a lot, just because I have found that most of my clients have a general assessment in our market of a rate of return on stocks and equities. So I don't need to articulate that. We also have a fair amount of clients that have advisors that will kind of go over that with them. And if they want to include me in that conversation, I'm happy to do that. If they were to want that, I'll offer that. So I explain to them that that's a function, that we could do that comparative analysis. Most people like the simplicity of just looking at the mortgage, but understanding the concepts that we're looking at. I would have that dialogue if people were saying, I want to put, you know, I'm trying to decide whether I should put 500,000 down or just the minimum of 20% down. We might show some different scenarios, helping them understand the difference of their monthly outflow and then the rate of return.
Yeah, and that's where the two times I see it the most, and you go ahead and go off the screen, is or go back to where you were going to go on the TCA, is that, or like, let's say it's someone that putting 20% down would, you know, compromise their cash reserves, and it might compromise their ability to invest in retirement. And you'd say, well, you have the 20%, but what if you put 10%, and then, you know, let's look at leaving that 10% and invested, what would it be? Those are like the two times I see it most. So
yeah,
cool.
I mean, the one thing about it is that dialogue comes up often. And I would tell you, Dave, that most of them get the concept of it from the standpoint of they don't need to see it. But I will say, you know, you're looking at a mortgage that you get a leverage for the next 30 years. That obviously, you know, with the raise in the tax deduction from a standard standpoint, you know, the mortgage interest isn't as meaningful to, say, like a typical buyer, but, you know, the mortgage does have tax benefit. So helping them, you know, see that difference and be mindful of it. I'm also really mindful when they talk about, you know, what their cash to close is, and saying, do you have enough for reserves? You know, just, do you have a rainy day fund? Or I like to call it, you know, an opportunity fund, in case, you know, a great opportunity comes across your desk, you can jump at it. Or, you know, you have a flat tire and you need to, you know, go buy new car tires, you have that option. And I like to talk to people about their cash to close, and saying, they're like, well, I can do that. And I'm like, well, do you have enough in case you need an improvement? You know, unfortunately in our market, you know, a lot of the houses, you know, in the average buyer's price point, you're not walking into a brand new house that's like dialed in and move-in ready. So we'll talk a lot about, you know, how over the next 5 years, you know, in this situation, strategy B would be your best, lowest cost of financing. So if you're going to be in the home for the next 5 years, you know, that's going to save you $4,100 versus strategy D. But, you know, have you factored in, you know, at this price point with this purchase and your down payment and other cash available, do you have the funds available for moving, for being able to move into the house and get a couple items of furniture that you need? Do you have, you know, if there's some work to be done so your house is safe and ready for your family, you know, that makes sense to look at going with strategy D, because it's still a great loan, but it's you know, putting you in a different situation. If you were to go with that rate buy down of strategy B, you know, that's $6,000 in cash to close. And for some families, that's meaningful.
Yeah, that makes sense. Well, before we go to refi, I want to ask a Larry Kendall question. But before I ask the Larry Kendall question, I noticed that you label them strategies, and you were the first mortgage coach interview where I remember a loan officer that did that. And I just can't remember the why. Like, I know why I love it, but why do you call them strategies versus loan programs?
Well, I want the focus to be on looking at what's the best plan for them, and not getting caught up on, you know, what's the rate or what the fee is. And that I wasn't actually the person that came up with it in our region. Another top producer in our group, Terry Gay, who's, you know, been at Cornerstone a long time, does a ton of production. It was actually his idea, and I adopted it from him. So
Jay, your voice just went a little crazy. I don't know if something changed.
An idea.
Hey, Jay, can you hear me? I don't know if something happened on your signal, but your voice changed. Are you there?
I'm here. Can you hear me?
Oh, boom. Okay, something temporarily changed. So someone else did. I personally love the fact that it differentiates you. So average loan officers sell rates, programs, and fees. You're talking about strategies. And then I also think when you're positioning yourself as my advice makes a difference and you're explaining strategies, it's just walking your talk. So I love it for a lot of reasons.
And I liked it better than originally. I was using option A, option B, option C, and option D. And then when Carrie brought that up to, at a round table, sharing best practices within our region, we immediately were like, went to strategy, because that's really what your thought process should be. What's the best strategy? What's the best plan of action for the financing of the home I'm buying?
So that looks like I need to do another interview. That's with Carrie, right? That's where you got the idea.
He's sharper than me. You bring him on.
All right. So stay tuned, guys. We're going to interview Carrie Day, and we'll find out where this all started. So one last question before we close out with a quick refi review, because I know you got to you're busy. It's a busy time in the market. I know you've studied with Larry Kendall and Ninja Selling. Are there any strategies from that you're implementing with Mortgage Coach? Is there any, it may have nothing to do with a purchase, but I'm a big fan of Larry Kendall. I interviewed him and I'm a big fan of his book. Is there just anything that you're using Mortgage Coach to power that you learned from Ninja Selling?
Well, I was doing, when I went through the Ninja certification training, I already was a heavy Mortgage Coach user. I wouldn't say that my Mortgage Coach usage or the numbers had changed at all, or that my advice really changed. It just, I would say that it underlined and underscored the importance of using it and taking the extra step to show multiple options and helping people understand that they have the opportunity to choose their financing. They're not, set with one scenario. And I would say that the Ninja way is all about serving people and caring for them. And so, I think that by doing a total cost analysis, by doing a pre-purchase consultation, by taking the steps to really make sure they're pre-approved for what we're presenting before we present, that takes extra work. It takes discipline. But that is the way of the Ninja. The Ninja is about discipline. It is about service. And it's about really making sure you're going the extra mile for people to be in a position to really know what they're looking at.
I love that. And I know another way of the Ninja is to do an annual review where you do not have a client for life mortgage practice if you do not have a process built around doing annual reviews for your clients. And, that's something that we automate in Mortgage Coach for some of you out there, but we always, when you're doing that annual review and it comes time to analyze options, it's something you can do. So let's do a refi TCA and then let's wrap it up. One thing I'm hearing a lot is I'm hearing like, hey, during the day, I'm doing my purchase first business. And then I am throwing, one, my phone's ringing. So I'm taking all the loans and leads that are just coming. And then two, I am creating TCAs off hours, putting a video on it. And sometimes I'm just texting and a client and they're texting back, let's do it. Are you doing any TCAs where you're just using them as proposals, or how are you using Mortgage Coach in the refi process?
We have done that in the past. I'll be candid with you. I mean, my team alone took like over 40 million in applications last month. And I talked to a loan officer. I think I had a loan officer in my branch came in on Saturday and they built 60 TCAs on Saturday.
What?
That's really time consuming. And I think it's great. And his adoption his capture is really good. We've tried to, at least we did that a little bit, that it's just a little bit time consuming. We try to start with, can we have a quick call for clients? And if we could have that initial conversation in this season, like we talked about, if it's a quick hitter and we know them and we've done a lot of loans for them, and the recommendation that we propose for them based off of their situation, if they're ready to go on that, we're just going to go. But just from efficiency standpoint. But if they want a TCA, or if they want it, if they just say, I'd like to see the numbers, can you send me some options? Then they're automatically going to get a TCA.
Well,
I
you're
would,
killing
I
it.
would
I mean,
say in the
you,
best practice world, we definitely would like to send out an annual review TCA ahead of time. If we're in July and it's just, we've had some really big summers the last few years. So with a lot of purchase business, it may just be, a Calendly invite to set up an annual review. But we do want to have an annual review with all of our clients each year.
okay, cool. So walk us through this refi TCA, then let's wrap it up, Jay. I want to get 40 million last month. I mean, you're on fire, brother.
Well, I'm not saying that I just put that in context of it's really hard to do a TCA for everybody. And, we're working really hard to get out to clients the savings opportunity. And some need, there's one client that I've revised their TCA 4 times for them this week. They're not decided. And so we're going to be patient with them and we're going to serve them. And that would be in alignment with what, Ninja teaches us, to treat one person at a time, and treat them well. So, but if there are some that it's a 3-minute conversation, you can take me from 4 to X, let's do it. So,
got it.
This is a strategy where someone has an $800,000 mortgage. We didn't have their data from the standpoint of like what their previous mortgage was. We'd like to do that, but they didn't send us their mortgage statement. And so if I don't have their statement, then I'm going to go based off of some assumptions, and I don't want to make their current strategy an assumption. But I like to have the current in there so they can see the savings and the cost benefit of this. And so what we've laid out here is a 15-year fixed rate refinance with rates that vary from 2.375 to 2.75. If you look at the point structure, it's got a large buy down to no buy down. I will tell you, we used to hardly ever go through large points. I'm not a huge believer of points, but we've moved to the large buy down because of the online lenders, that if people go to bankrate.com or if they talk to Quicken, anytime we see a quote from them, like we'll get the TCA over and it's like a 2-point buy down. Quicken on average, their consultation is going to show they're going to start with a 2% rate buy down. And so that they're going to see a really low rate. And so we know that we need to show something in that range for everybody that we see. When you have competition that's doing as much volume as they are doing nationally, we have to be able to help the client understand that and see the difference. So we're really focused on making sure people see multiple scenarios.
Got it. And that's the best practice, guys. You give people options. They will trust you. It's an uncommon level of transparency, and Mortgage Coach makes it an efficient, effective way to do that. Did you want to show something else on your screen, Jay?
No, other than, this is where we're always going to be looking at with the person. We're always going to come back to our cost of savings over the first 5 years, especially on a refinance. And in this situation, you're ahead. Your best scenario is your lowest cash to close, lowest cost scenario, strategy D. And so I will typically talk to people about that. Now, some will still opt for a larger buy down because in their mind, at this point, they've lived in the home, they know the house, and they plan to be there long term. Then you can make that strategy selection. And again, I'm always coming back to them, telling them, this is your loan, this is your option. I'm not going to pay your mortgage for you, so pick what's best for you.
I love it. Giving them options, helping them make it. You're the guide. You're helping them make the best decision. A couple of homework assignments. Yeah, I'm going to put a link to the interview I did with Larry Kendall last. I'm a huge fan. I think every serious career-oriented mortgage professional that just wants to be the best advisor they can, at a minimum, read the book. And in Maxim, go through his certification program. I mean, it's just great leadership that you will get an ROI from. And it will also just help you become a better leader to the agents that you serve. You know, it's, again, I'm not going to get into a lot of details on it, but I'm a huge fan. Check it out. I'll put an interview down below.
We had a lot of our loan officers go through the ninja training. And I will say that everyone walked out of the conference uplifted, encouraged, excited about what they do. And everyone said that's the first sales conference training that I've been to that I didn't feel like I needed to go take a shower afterwards. They felt uplifted and encouraged.
Awesome. Awesome. So another interview I want to put down below that I think is just super important right now. I did a site visit with Jeremy Forcier last week, and one of, you know, he tracks every referral that he gets. I'm sure Jay does the same thing, what his sources are. And his number one conversion was referrals from clients in process. So better conversion than his realtor referrals, better conversion than his past clients. Like his loans in process were giving his best conversion. So his strategy was every time a client says thank you, which often is when they get their approval, he sends them an email. And again, I'm going to put a link down below to it was just a 5-minute at his site visit. I recorded him describing the strategy. He sends, I love helping you. And then that was the subject line. And then he says, can you help me with something? My goal this year is working with people like you. Can you introduce me to 2 people that you think that you know that could use my help? And guys, obviously Jay doesn't need any more loans. I mean, he's killing it. He's at maximum capacity. But if you do the math, like Jeremy just started implementing this last month, he had 8 referrals and 4 loans, and it was the 20th. And he figures that he's probably going to get an extra 5 to 6 loans a month from this. Now, again, he's another monster producer, yeah. But even low producers, you guys can get 1 extra deal a month from this. That's 12 loans a year by just creating the habit that when a client says thank you for my pre-approval, thank you for closing my deal, again, you ask them in a thoughtful, on-point way, who can I help that you know? And if you did deliver a TCA, you get more business. So I wanted to give that idea because it's hot in the community right now. And I don't think enough loan officers get referrals from their current database or their current pipeline.
In pipeline, I think that's great.
So Jay, as we close this out, any last leadership words that you have for the mortgage coach community, any words of wisdom you have for folks?
You know, I've been beating this drum for a long time, but I find that we're in a society that is highly competitive, and comparison becomes this disease that a lot of people are suffering from. So I just encourage all of us to run the race that we're running and to learn from others, but not compete with other people. And really, you know, to compare is to despair. And so I'm encourage everybody to be the best version of themselves. And that, you know, when we get into comparison, we're either worse than somebody else or better than somebody else. And that's robbing us from being the best version of ourselves. So go be your best you and live your life the best and the fullest that you can. And really, you know, strive for excellence. And that's being yourself and being authentic to your goals and your family, and be whole to all the things that you're excited about.
Wow. I'm not going to add anything to that, dude, because that was beautiful. And it was tremendous advice. So guys, if you got value from this, give us a like down below. Your talk, you know, that's wisdom from someone that's not only, you know, at a very elite level as a producer and a team leader, but someone that mentors and manages a lot of mortgage professionals. So, you know, this is one of those interviews that you should study. There's just a lot of little nuances that you could get from the language that Jay uses. You could tell that, I mean, guys, he is super busy. I mean, he doesn't have time for this, but he's present. And this actually went at least 15 minutes longer than either one of us planned on it going, and he's present. So take that presence one thing at a time and then go to the next. So Jay, dude, I really appreciate you, brother.
Great to
this
see you,
call
man.
is a wrap, and thank you very much.